What is going on, everybody, ladies and gentlemen? Today, I'm going to be going over how to mark up charts, basically the basics of Forex, what a Pip is, and how to really understand the market using the basics, such as, trend lines, support, resistance, supply, demand. So first thing that I want you to do is go to tradingview.com. Now, this is what I personally use to mark up my charts. So go ahead. If you have not created an account, you can join for free, but I'm going to go ahead and sign in. Cool. Now, once you're in, simply just go to chart. It's going to take you to the charts, right? Once you're at the charts, I'm going to basically walk everybody through TradingView on this video, and how to mark up, the basics. So we're going to go over basic Forex fundamentals, and literally what you need to know before you even start trading. So if you're brand new to Forex, brand new to trading, this is something that you highly, 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 I recommend you at least have this knowledge before you get into the market. So I'm going to go ahead and clear this out. Cool. So first thing that we're going to get into are basically time frames, right? Now, if you look here in the background, it says USD JPY, right? 60. Now that 60 means that every candle that you see is 60 minutes worth of time of movement, or 1 hour worth of movement. So if we zoom in on the market just a little bit, you can see that each one of these candles represents an hour in the movement. Now, excuse me, the wicks, which are these long lines, means that's where the market went, but it didn't close there, right? So basically what matters is these candles, right? The wicks just show where the market went, but price opened and closed right here and closed right here. And for example, market opened right here on the next hour, went up a little bit because you can see that wick, and then continued down and has yet to close. So a pip, you might hear people talk about pips a lot. I'm going to go ahead and just break this down really quick for everybody. So a pip, right? So since we're trading USD / JPY on all Japanese pairs, right? You're going to have a number that looks something like this. It's going to have 3 numbers and then a decimal point and then 3 numbers after that, right? So a pip is going to be the number that is right after the decimal point, that 1, right? Or a second over to the decimal point, this 1, right? Now, basically, what a pip is how the market is calculated, right? So if it goes up or down, let's say 20 pips, right? So let's say that the market moved 20 pips, right? If you were on a $1 lot, you would have made $20. A standard lot, you would have made $200, and on a 10-cent lot, you would have made, $2, right? So what I want to break down now is lot sizes, okay? So I'm going to go ahead and just write this out for you. So 1.00 lot size, you would have made $200 on a 0. Sorry guys, I can't type right now. My apologies. 0.10 lot size, you would have made, $20, and on a 0.01 lot size, you would have made $2, right? Now, the way that I really look at this, and the way that I calculate lot sizes, and this is just what helped me, right? This is what was easier for me. Now, if you look at lot sizes, okay? So what is a lot size, right? A lot size is basically the dollar amount that equals a pip, right? So if you're trading on a $10 lot, which is a 1.00 lot size, every pip is worth $10, whether you're buying or selling, okay? So let's say that you are trading on a 1.00 lot size, right? That's equal to $10 per pip, right? If you're trading on a 0.10 lot size, that's equal to $1 per pip. And if you're trading on a 0. Once again, I can't type, guys, my apologies. 0.1 lot size, that's equal to 10 cents per pip, right? Cool. Now, what I normally do, and this is what helped me in the beginning, is think of a number, right? Multiply it by 10, and that gives you the dollar amount that the lot size is, right? So 1 times 10 is obviously 10. Or what you can do is move the decimal point over to the right one number, or one spot, and that gives you the dollar amount that the that your lot size is and what every pip is to you. So if we're trading on a 0.20 lot size, that's equal to $2 per pip. If we're trading on a 0.05 lot size, that's equal to 50 cents per pip, right? Now, hopefully that makes sense. That's basically, how the market's calculated, what a pip is, and what lot sizes are. Now, just to show you what other currency pairs look like, so let's go ahead and go to Euro USD really quick. Not Euro UDS, my bad. Euro USD. I'm human, so I apologize. There are some mistakes, not gonna lie. Internet's being slow as well. But anyway, so 1.20274 is our number, right? Is our currency market price. Now this 7 that's right there, that's 7. Let me move this over so I can. Perfect. Cool. So the 7 is going to be your pip in every other pair besides JPY pairs. Now remember that, because if you trade, yen pairs, the Japanese yen, it's going to be the number that is here. Let me type this out. So let me 1.2027. Jeez, I can't type. So if we had like a yen pair, it's going to be the 3, for example, right? So let me okay. So on every currency pair, this number is going to be your pip, right? So if this went up to an 8, that would be 1 pip. Went down to a 6, that would be 1 pip, right? So now what I want to go into, hopefully this makes sense, is I want to go into, support, resistance, and trend lines. So let me go ahead and clear all of this out. Perfect, 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 perfect. So what I normally do is I start marking up on a daily, 4 hour, and 1 hour, right? So we're just going to go to the daily really quick. And I'm going to show you guys exactly how I mark up support and resistance. So I go to this little tab right here, and instead of doing candles, even though we're going to look at the chart on candles, I'm going to go to line, right? And the reason why I go to line is because I just feel like I can get the support and resistance better, marking it up better than looking at candles and whatnot. So this little tool right here, you're going to click this, and you're going to find horizontal line, right? Basically find the highest point and the lowest points, right? And if you don't want to have to click on it every single time, there's a little drawing tool. You just click this and it keeps you in drawing mode, right? And now what you're going to do is find every time that the market touches twice, right? So like right here, we have 2 touches in this area. We have touches here. We have touches here. We have touches there. We also have touches up here, right? We also have some over here. Perfect. So now we have our support and resistance, okay? Now, what are support and resistance, okay? Let me delete this line so that I can kind of break this down, for you. So let's go to a 1 hour chart, right? And hopefully this will be a little easier. Actually, let's go to a 4 hour. Yeah, let's go to a 4 hour. Okay, cool. Let me go back to the candles really quick for you. Cool. So support and resistance for this example, this right here, let me change the color just so it stands out better. Cool. So let me pull this up. So think of support as the floor, right? So if you take a bouncy ball, you bounce it on the ground, it's going to hit the floor, and then it's going to go up, hit the ceiling, come down, hit the floor, hit the ceiling, et cetera, right? Pretty basic concept of support and resistance. So this top line is our resistance, right? So if I take this, mark it up right here, this is going to be called resistance or the ceiling, right? Okay. So basically what this means is that the market, so if we look here, right, I'll scroll back a little. So as you guys can see, support, resistance. Support can become resistance, and resistance can become support. And I'm going to kind of break that down and show you exactly what I mean. So since at the moment, this is our resistance, this was also resistance, right? Now, why do we say that? Because let me grab this and bring it over here for us. Let me scroll over just a little bit more, zoom out. Perfect. So as you can see, right, this and this level were once resistance, right? So the market comes up, tests this area, you have 1 touch, 2 touch, 2 touch, cool. So it respects this area, right? Meaning if it gets around this area, we're potentially looking for a sell opportunity. Not always, but potentially, right? Here's the support. 1 touch, probably have a few touches back here as well. Okay. So further back, we probably have some touches, but here's support, right? Meaning that whenever it gets around this level, it touches but it doesn't break, right? So support and resistance. These are two main levels of support and resistance. So if you look, the market plays around in this area, right? Like here's some resistance as well, right? I'm going to show you guys exactly how, resistance can become support. So come here, market's moving around, right? Breaks this level. And this level right here was once resistance because it touched, broke, came back up, touched this. This turns into resistance. We have a breaks through support. And then market closed right here. That's why you have a gap. And then opens up, touches again. This is now support again. And then you have the market break through, respect this level, and continue up, right? Now, what's that do? It turns this level into support, and we know that resistance is here because this was our previous resistance, a key level of resistance. Comes up, tests this level of resistance, breaks it. So this turns into support once again, right? And then continues to go up, continues to break resistance, right? And we know that this is our main level of support, but it broke this level and respected it, so this can also turn into support, right? So basically think of support and resistance as, easiest way to put it, floor, ceiling, levels that the market respects, right? So if we zoom out, we can see that this right here is a key level of resistance. Every time that the market gets around this area, it's respected it and looks to sell, right? We can also tell that every time the market gets around this level right here, this level right here, it's a level of support. The market respects it, right? Very, very simple stuff, right? So support, resistance, floor, and the ceiling, right? Now, trend lines. How do you draw trend lines? Remember that the trend is always your friend, right? So I'm going to go ahead and go to a 1 hour because I actually saw a trend in USDJPY a second ago. If I can find it one more time. Here, we'll just use, we'll use this as an example. So you can actually draw trend lines by coming here using this trend line tool right here, right? And here you have a trend line, right? And with trend lines, make sure that you get 2 touches. So 1, 2, and then you also have a trend line that was right here. We're on a 1 hour, right? Yeah. You have a trend line that was right here in this level, right? Cool. So there's your trend lines. Pretty simple. Basically, just look for where the market's going. If it's in an uptrend, a downtrend, etc. We'll go to a larger time frame and we'll look. So right now, you could draw a trend line like this. Right? Because it's in a downtrend, the market's been moving down, comes up, respects this level, continues down, comes up, respects this level again, continues down, comes up, respects this level, continues down. So there's your downtrend, right? Now let's look at another pair just to show everybody on another pair. GBP, USD. Cool. So let me delete the everything that's on my chart as of right now. So we can come back to trend line. Here's where the trend started. Draw it just like that, right? Pretty simple, pretty simple. And then if we go to a 1 hour time frame, you can see that the market touches a few times on this trend. So you have 1, 2, almost 3, 4, 5 touches on this trend line, saying that if the market were to come down and get close to this level right here, you're looking at a potential buy opportunity. So if the market were to do this, let's just say that does this, comes down, you're looking for a potential buy in this area, and you're expecting the market to continue up because it's respected this level, right? So that's how you draw trend lines. Very, very simple. All this stuff at the bottom, if you're just getting started, don't worry about paying attention to any of this. I know we have some videos that will be covering MACD, RSI, Fibonacci, more advanced, and there's also a ton of information in IML Academy that I highly recommend you go through if you have not. That's how every one of us that are proficient at trading actually learned how to trade. We didn't go get classes anywhere. We literally used iMarkets Live and IML Academy to master this skill set and master this craft. So yeah, that's how you use trend lines and what pips are, as well as support and resistance. Now, a little other fun thing you can do with with trading view is you can actually, once you understand harmonic patterns, you can mark up harmonics with this tool. Right now I really don't see any harmonic patterns. I mean, you could call this a harmonic, but me personally I wouldn't. But yeah, so here's the harmonic. There you go, you have another harmonic pattern. Use the scanner. Use the scanner though if you don't know how to mark up harmonics, or if you don't know harmonics. But yeah, so that's basically how you use TradingView. You have your trend lines, your horizontal lines. These are really the only two tools that I recommend, really understanding. And then you also have your channels. This is broken down, what channels are, what zones are. And then you also have your I use this every once in a while to mark up support and resistance. So like what I'll do is find the top of the candle and then go to the wick, right? So here's a zone of resistance, right? And then I don't know why my computer's being weird like that, but there's a zone of resistance or support. There's two zones, right? So sometimes I'll use this to mark up, but what I highly recommend, once again, is just going to your line chart and marking it up. But as you can tell, it's pretty accurate. I do this because of the wicks. So I'll break this down really quick. So if we go to candles, see how the wicks go up a little bit higher than the actual line, right? And the candle, because that's where the market went, but it didn't open or close there. I use the line chart to mark up precise where the market opened and closed. So show you guys, we go to line chart, market open and close there, that's a level. Market open and close around this level as well, right? So there's your two, support, resistance, right? Very simple. And we can continue obviously to mark this up on support and resistance, and then we can also come here with the trend line. Let me get out of this real quick. Let me drag this over. Cool. There's your trend line. You could also draw the trend line like that if you wanted, but there's your trend line. Then we go back to the candles, right? And it's still very accurate. Just the wick will, the wicks, the little lines, not the candlesticks, will show you where the market moved. During a basically not where the market opened and closed, but where it went. So hopefully this video helped you understand the basics of trading. But yeah, guys, if you guys have any questions, feel free to ask in the groups, and I'll see you guys in the group chats. Good luck and happy 2018, guys.